Good evening, everybody. My name is Lance Crawford, and we are going over our bonds and stock presentation, and our company is Kroger.
My name's John Barry.
And my name is Ayman.
So to start, we'll go over what is capital structure, and capital structure refers to how a company finances its overall operations and growth using different sources of funds. It typically includes debt and equity, and it is found by examining different leverage and market value ratios. And one of the key uh, is the debt to equity ratio is a key metric. And these are some of the ratios that we went over to use to find these as well. And then a little bit about Kroger's capital structure. Kroger provides a balanced mix of debt and equity, and they lean moderately towards debt financing. When we examined their capital structure, we found that they do rely more on debt, and the structure supports stable operations in low margin industries such as retail and grocery. And when we examined the market value, we found that Kroger's reasonably valued by the market. They have a healthy market cap, and the valuation reflects stable and slow growth expectations, which is typical for a mature retailer.
For Kroger's bond issuance overview, in 2020, Kroger entered the bond market to raise capital. The main goal behind this issuance was to support general corporate needs. This included things like refinancing some of their existing debt and possibly putting funds toward future investments like capital projects or maintaining smooth day-to-day operations through working capital. And for the total amount raised, Kroger effectively raised $1 billion through this bond issuance in 2020. That's a significant amount, and it really reflects investor confidence in the company's financial stability and long-term outlook. Raising capital through bonds, especially at that scale, also suggests that Kroger was in a strong enough position to take advantage of favorable market conditions. This influx of funds gave them flexibility to manage debt and invest strategically in their operations. Characteristics of Kroger's bonds. Kroger's bonds have a 3.625 annual coupon and mature in 2030 with a standard par value of $1,000. They include a call provision, meaning Kroger can redeem them early, and a sinking fund provision to help ensure repayment at maturity. These bonds are not convertible, so they can't be exchanged for equity. For bond ratings, Kroger's bonds are currently rated Baa2 by Moody's and BBB by S&P, which are both considered investment grade. That means they're seen as relatively stable with moderate risk. Since the issuance, there haven't been any change to these ratings, which suggests steady financial performance. But like any investment, there's always some exposure to broader market or economic shifts. Why debt financing over equity financing? Kroger likely chose debt over equity financing for a few smart reasons. First, the cost of debt at 3.625% was lower than issuing new equity, which would also dilute shareholder ownership. By using bonds, they kept control within the company. Plus, interest payments are tax deductible, making debt more cost effective. And in 2020, interest rates were low, so it was a good time to lock in favorable terms in the bond market. For the issuing bond summary, to wrap it up, Kroger issued bonds in 2020, raising $1 billion primarily for general corporate use. The bonds carry a 3.625% coupon and mature in 10 years. With solid investment grade ratings of Baa2 and BBB, they represent moderate risk. Overall, debt financing made strategic sense for Kroger. It was more cost effective, came with tax benefits, and helped them avoid giving up ownership control. Kroger went public way back on January 14th, 1928. At the time of their IPO, they issued common stock. and there was just one class of stock available. The shares were priced at $24 each, and they offered a total of $1.5 million shares to the public. Was it considered a successful IPO? Considering the time period, that was a pretty significant move, and it helped set the stage for Kroger's long-term growth. While historical data on the immediate market reaction is limited, raising that kind of capital back then was a big deal and definitely positioned them well for expansion.
So now regarding the daily stock prices, over the past 3 years, the stock's adjusted close price experienced significant fluctuations. As you can see from April 2022 to early 2023, the price steadily declined from around $58 to $42. This drop may have been caused by broader market concerns such as inflation, rising interest rates, or the company facing performance challenges during that period. Between early 2023 and early 2024, the price began to stabilize and show signs of slow recovery. The company might have adjusted its strategy, improved its financial results or regained from investor trust. This period reflects a transition phase where confidence started to return, but not fully. Then, from January 2024 to April 2025, the stock showed strong upward momentum, rising from $48 to $64. This suggests a clear recovery and possibly even a strong performance, such as increased revenue, successful product launches, or positive news that attracted investors. The rise in price is also supported by high trading volumes during early 2025, likely signaling important announcements or earnings results. Overall, the stock's movement reflects how its performance and external market conditions impacted investor perception. The steady growth in the last year shows that as the company may have adapted well, leading to renewed confidence and a rise in its market value. Now, on the next slide, I will talk about the adjusted cost price. Based on the adjusted cost price provided, Kroger stocks has demonstrated solid growth and resilience over time. From a price of $56.74  3 years ago, the stock initially experienced a dip to $45.81 2 years ago, but has since rebounded significantly. 1 year ago, the stock reached $54.95 and continued its upward trend to $66.55. And 1 month ago, $67.18 1 week ago, and $68.22 today. This consistent increase over the past year suggests positive investor sentiment and strong company performance. The steady growth in Kroger stock's price may reflect successful business strategies, market stability, and investor confidence, positioning the company as a strong player in the retail industry.
And using these closing prices, we were able to calculate the return on investment, which we did by subtracting the initial price from the final price and dividing that answer by the initial price, and then we times that number by 100%. So here is a chart of our periods, the initial price, what the final price is today, and what the return on investment would be here. And for your biggest ROI, you are best to buy at the IPO, and your lowest ROI would be if you bought a month ago. Is Kroger a good investment? There are many pros and cons to this investment. The pros being that there is consistent growth. Over the last 3 years, Kroger has increased their stock and their ROI. And dividends, Kroger pays a dividend of 1.85% yield, adding to returns beyond stock price appreciation. Kroger is an essential industry, so as a grocery and retail chain, Kroger operates in recession-resistant sector. So an example would be even during COVID, Kroger was open and running. And long-term resilience, since the IPO highlights its staying power in the market. Some of the cons include moderate to short-term gains. The ROI over the past year is under 6%, which is lower than the broader market average. It's not high growth. Kroger is more stable than speculative, so if you're looking for something with high growth and high returns, this might not be it for you. And another con is it is tied to consumer spending, so economic downturns or food inflation, such as tariffs, can affect margins. But overall, Kroger seems to be a strong long-term investment, especially if you are seeking stability, growth, and dividends. It's not exactly a get-rich-quick stock, but it has consistently rewarded patient investors. Here are our references.